This is Gilbert Gillard. I'm talking to you from CPLS headquarters. This is Tufts On Tax, where all your tax law questions are answered right here. Any trouble you have with taxes regarding lawsuits, trouble with your employers, businesses, friends, family, even with the IRS, your peace of mind is right here with Mr. T. Scott Tufts. He is the expert, and in his specialty, he is the master in the unique aspect of the law. When it comes to taxes and tax laws, of course, you can call us again anytime at 877-647-7887 or go to cplspa.com or tuftslawfirm.com or just simply email him at any time at stufts@cplspa.com. Hello, Scott, again. How are you?
Good to be with you, Gilbert.
Wonderful to have you here and to come back and discuss all these tax laws and tax segments that we have here. Now, we brushed a little bit on this last time, and we're going to continue talking about it. Now, we're going to start generally, mentioning it as to remind ourselves and remind the viewers or the listeners to what we mentioned last time. Now, all these tax forms and tax laws, how can they impact people's daily lives?
Gilbert, so one of the things that we have been trying to discuss last segment and what we'll be looking at are that there are actual tax forms that somehow get submitted, whether through software or through your accountant or by yourself, or that are required to be filed and you don't know anything about it. And those forms actually play a part in your daily life in different ways. And it can come up in a lawsuit unexpectedly. It can come up in a real-life dispute between two spouses. It can come up in a work situation. It can come up in a number of different contexts. So we're going to look, to describe what those impacts are and how folks are need to be aware of these types of forms.
Now, okay, that's understandable. Now, what professionals are aware of it, depending on these forms and segments?
So some of the experts out there, other attorneys and CPAs will be aware of some, maybe even most of these forms. Mm-hmm. If an accountant has not had experience in dealing with some of these issues, these forms may never have come up. So it's a hard question to ask, except the types of professionals that will be dealing with this form would be basically accountants, lawyers, and those who prepare returns.
So what kind of litigation, or let's say lawsuits, that arise dealing with this?
Sure. So if we look at the relationships involved and the form, mm-hmm. I think that will answer the question. So, for example, there could be a K1, a Schedule K1. Well, we have to ask a little bit more about that because the K1 connects partnerships with partners, LLCs with members. It also connects S corporations with their shareholders. So the K1 does that. It also connects trusts with their beneficiaries. So when we say K1, we've got all of those relationships to cover. If we're talking about a 1099 and a W-2 connects employers and employees. A 1099 will connect independent contractors between the payor and the payee, meaning who's paying the non-employee compensation versus a wage in the employer-employee setting with the W-2. We will have connecting of dots with the whistleblower form. That would be a 211. That is when someone believes that tax evasion or avoidance is occurring and they wish to report on that. They can use a Form 211. So that would connect the whistleblower with the IRS as a receiver of whistleblower information. We could look at someone who's reporting identity theft and reporting fraud. and there are some forms on that. Let's say someone wants to report something anonymously. That form would allow someone who says, look, I don't care about a reward. I do, though, want to report something anonymously, or there's an identity theft, or there's an abuse occurring. We can talk about those forms. There may be also a situation where, because you have international dealings, you might be filing forms like 3520 and 5471. That would basically be the types of forms that go much deeper into where are you operating in the world, what kinds of reporting is the IRS hoping that you can produce and file to explain those relationships. And then last but not least, the IRS occasionally comes up with special forms like the 8886 or the 8918, where they're saying, look, we think that if you're engaged in certain transactions that are marketed, we want to know about them ahead of time, and we're going to put the onus on those who promote those types of perceived abusive tax shelters. Some would say they're just aggressive. Some would say that they're above board. But the IRS may be able to tag them and describe them as a reportable transaction, and those forms are done. So there may be an onus in that last category on accountants that need to know that if they have a client that's engaged in a type of transaction, it has to be flagged on the return, which then gives the IRS a heads up that you do it. But on that point, we have some forms out there that if you don't file them, there's significant penalties. So the idea that even if it's just reporting on something you're doing, it's a form that is required, so that if you don't disclose it, that's a problem. And a great example of that, Gilbert, is folks who have foreign bank accounts. They'll have to file what is in the past been called an FBAR form, and essentially reporting on the fact that they have a foreign bank account. So those are, that's just the surface of them, but that gives you some of these categories that we'll be looking at.
Well, that brings me to that question here. I know that you went through generally on all your segments, and I looked at your website here, Tufts Law Firm, and also you have a newsletter that you're sending out to many people through email campaign, and you have these same segments, and you keep updating them, and I see that you have updated forms and they're the same forms, but updated issues regarding these forms. And you were giving me a little bit, giving the listeners some brief about each form and each segment, but do we all have to know all these forms? Do we have to know everything about these tax forms? Who would know? Like, if we can go on each segment and explain briefly, let's say first segment was your K-1 legal troubles. Mm-hmm. Who should know about that first? If you can give us a little bit about that.
So let's take the K-1. If you are a member of an LLC that has other members in it, member being an owner, Gilbert. So we have, that's the term of art used for owners in LLCs, which is a type of business entity. If you're an owner of a LLC, you are going to see a K-1 if you have other members, meaning that you have more than one in that entity. Same thing with a partnership. Let's say you're in a partnership, a limited liability partnership, basically LTD, LLP, LLP. If you are a shareholder in an S corporation, that's a term of art. It's basically a corporation that has shareholders, but it has a special standing with the IRS called an S corporation. You would be getting a K-1 every year if you're one of those shareholders. And then if you are a beneficiary of a trust, Gilbert, you would have a K-1 that comes to you. So quite simply, a K-1 connects the ongoing activities of these entities, these corporations, LLCs, partnerships, or trusts, with you, the individual who receives the information to hand to your accountant and put it on your tax form. And you need to know, well, that's all great. I just handed it to them and it spits out a result. Well, what happens if the spitting out process or the result is in error or a problem or something you didn't anticipate?
Okay, that brings us to the second segment that you have, disgruntled workers. Tell us a little bit about that.
Well, by its name, It's looking at workers, and we're in a economy now that whether it's Uber or the remoting aspects of work, the concept here is independent contractors and employees and their relationship with their employers or the persons for whom they work. So the disgruntled worker situation would come up with almost any employee or independent contractor who is in disagreement with their boss, with the persons with whom they work. And the form that can get caught up in the middle there is a Form 1099. And what can happen there also is a W-2 that might be in error. And then there are additional forms that flush out the disputes that occur between workers, between worker and their employer, and the disputes. So, Gilbert, in other words, you could be in a totally non-tax context of a labor law dispute, a discrimination suit, a harassment suit, and yet as part of your pay, you need to then scrutinize the economics of your arrangement, and are they being handled properly and reported properly?
So this is only workers to employers. Is it workers and workers?
Well,
other employees?
Sure.
Together?
Well, it could be. But by and large, it's going to be, you think of independent contractor, you think of relationships where franchisor, franchisee, joint employer situations. Basically, Gilbert, if you can think about a situation where I work for you, you work for someone else, what happens if the lines get blurred between that? Meaning that I work for you, you work for someone else, but I'm really working for the someone else, and it gets a little bit kind of crazy
tricky
like that. So the idea is that the agencies that look at this in our federal government, as well as the state agencies, are going to want to know, are you working for someone? Because after all, Gilbert, let's just take a simple situation. You're driving a company vehicle and you get in an accident. Can the victims or the injured parties from that sue the party that hires you? So if you're on the job and you commit an injury, that's going to be a big difference than if you're on your own. So in that context, something that seems to have no tax or economic impact as far as what we're talking about actually can be the starting point. So if you're in any kind of dispute involving these kinds of issues in worker settings, or there's been an injury or whatnot, we're going to eventually come around to, is that relationship properly being handled, and can come up as far as the settlement of the case. Let's take the settlement of a dispute. You may be a worker and you settle your matter. Is it taxable? Is your recovery taxable? Right, Gilbert, you get a recovery in a lawsuit. You're looking at it and you want to know, is it under the personal injury exclusion of the tax code that is exempt from tax? So these are the issues. What about the payments made to the attorneys? How are those handled? So anyway, that's
it involves so many details. We can go into it. Now, that brings us to the third segment, which is IRS whistleblowers. So give us a little bit about that. The name kind of...
Yeah, it's a little scary. So not everyone knows that if you wish to come forward as a whistleblower, that you can do so in the IRS context. But it's a situation that needs a lot of good advice. And what I mean by that is the whistleblower is not going to be someone's friend necessarily if they're coming forward with information. Not everybody's up to the task. They need good advice. They need to know whether what they want to report on is actually a violation. We see quite a number of times folks will come in and think that there's been a tax problem, and there isn't because of the complexities of the tax law. And then before they file it, they have to have their eyes wide open because there's lots of criteria into whether you can even recover money. There might be a reward that you're hoping to get pretty quick and it won't come quick. And you have to really understand all of that. And then there can be ramifications. If you kind of get off and get started on being a whistleblower and it's not upheld, if you will, or not pursued, and you shared confidential information, maybe that could be a problem with the person against whom you have blown the whistle on, because they may come back on you and say, what were you doing? So it requires someone like myself to walk you through that treacherous forest, if you will.
Definitely, we don't want to mess with Uncle Sam here. Now, this is bringing us to segment number 4, which is reporting tax fraud and schemes. I mean, I guess it's very clear what that one says.
So let's say that you're not necessarily interested in recovering an award, but you have something going on where your preparer or someone involved with that is promoting something that you know is hurting the overall economy, hurting the overall tax policies and procedures, creating problems, identity theft, for example, someone using, the improper Social Security numbers, something else as far as a fraud that you're pretty clear on. But again, in a situation, not an IRS whistleblower like the other segment we're talking about, this is really dealing with the schemes and things that are pretty apparent to you that shouldn't be occurring. There are special forms for that, and that's why I have a separate segment on that.
Does this one happen a lot? I mean, do you face a lot of lawsuits with clients going through?
Well, you'd be surprised, Gilbert. It's the taxes and avoiding taxes has been around a long time. I'm reminded of there's places in the South where they had to worry about in the colonies and back in the old days how much property tax they had to pay, and it mattered how much of the road you faced. So they constructed their buildings to only have a sliver of a front door on the roadway, and then they built back from there so that they paid the minimal amount of property tax or some tax to the locals. So this just gives you an idea of drawing the line can be somewhat complicated from as you're suggesting. But no, in this segment, we're talking about things that are kind of way out there. Let's say aggressively suggesting that the tax system violates the Constitution. Kind of these kinds of things that it's only in the minds of those who create these things that then are perceived to be tax schemes and frauds that go beyond just paying a penalty, Gilbert. In these situations, you have to worry about criminal exposure. And so you may feel like this is a valid thing that you're doing, and you might have all of the patriotic feelings maybe behind it or other sense that you're right. But if it's going to get you into potential criminal exposure, maybe that's not worth it in the end. And
Definitely not. Now we go to segment number 5, which is international tax form and troubles. Tell us a little bit about that.
So Gilbert, we're in a much more of a global world today. The e-commerce and the internet and all of these things allow for contacts across the world. Folks are with families and friends and international dealings. They may have businesses located outside of the United States. So once you get into a situation where you have international dealings, you may have family abroad, you may have assets abroad, you may have a foreign trust. We might see in the business setting someone has pursued an offshore trust, a asset protection trust. There may be, like I said, family members from, located in foreign countries, and an estate planning may need to be pursued. You may have a family member who has passed away and they have a foreign bank account that's not been disclosed to the IRS. There may be foreign trusts that have been set up that you're a beneficiary of. Basically, if your contacts go outside the U.S., then there's a whole segment here about how are we going to interact in the international tax realm. One quick example, Gilbert, a decade ago, the Swiss banks, where the idea was that you could put money in Switzerland and no one knows about it. There was a sworn secrecy between the international banking community and those individuals. Yep. Well, that changed. The government policies, they were effective in essentially creating economic incentives for these countries to then disclose these accounts. And at that point, those relationships become, suddenly they went from being hidden to transparent, not because you decided to come forward and report a foreign bank account, but because the rules of the road changed and the foreign bank system decided to be transparent and report those accounts. And then now you're in trouble because they're reporting on your accounts and you haven't. And that can put you in harm's way.
I am so glad I don't have to deal with that. Now that we move to the last segment that you have on there, abusive tax shelters schemes.
So like the fourth category and a little bit where we talked about tax frauds and schemes.
Correct, yeah.
This form, though, is very particular in that the IRS has kind of preemptively identified certain transactions that are of interest to them, meaning that they haven't said that it's a fraud or a scheme. They've actually, usually these kinds of transactions have been put together by very smart, intelligent folks who literally comply with the tax laws. And it's structured where it meets the words of the code, but it's got a problem to it, meaning that it's perceived by the IRS to have an abusive element to it, meaning that it's too good to be true, Gilbert. It would be like the situation where you say, let me get this straight. I can go into this transaction and I suddenly, before I had to pay a bunch of taxes, now I'm in a situation where suddenly I don't. How is that possible? That's an oversimplification, but the point being that this separate category is where the government and the IRS in particular have described certain transactions that they want to be flagged by a filing of a form that they want to look at. Does that make sense? In other words, tell us ahead of time that you've got this, that you've been involved in this transaction, and we want to look at it. And that's it. But the problem there is that if you don't know that you're in one of these and your preparer doesn't use this form, you can be penalized severely for not even disclosing it, regardless of the merits of the tax approach taken.
Well, that's a lot to take for one day. I'm sure we will go more details into these segments and all these forms to explain to our listeners. We'll be here every week, Tufts on Tax with Mr. T. Scott Tufts. You can call us always at 877-647-7887. You can visit us on cplspa.com or tuftslawfirm.com, or you can email him at stufts@cplspa.com. Thank you and have a wonderful day.